Okay, hi everybody, and welcome to a very special Victorian edition of the Australian Property Market Update brought to you by Creatopia Constructions. I'm your host, Mary, and pretty much right now we're in the middle of stage 4 restrictions, the toughest restrictions ever imposed on Melbourne metropolitan area, and the rest of the state is currently under stage 3 restrictions. So the important thing as a property owner and investor is to really see what these impacts for the short term and the long term is, so you can plan your own wealth journey as well as life journey. So let's get started. So really, this particular presentation will cover our research specifically for Victoria and also a little bit on overall Australia economy, firstly, the impact on property values, and also some ideas on options, especially for Melburnians, Victorians at this time. And our company, Creatopia Constructions, is actually head office based in Melbourne. So we're feeling this with you, and thus it's very critical for us as a business and also as an investor and property owner to know all of this. So I thought, why not share it as well to educate you and help empower you, which is really why we're doing this. We are a property renovation and development company, helped over 125 families over the last 7 years, over $12 million in projects. If you overlook that, I mean, really the most important thing you just need to know is our mission, which is we're passionate about helping everyday Aussies escape a mortgage stress and reach financial freedom through property, which is why the business exists, especially more critical now during the COVID-19 time. And hopefully this presentation empowers you with knowledge. And just a general disclaimer saying the information is general in nature, and the final decision that you take for yourself is your responsibility. So we'll get started with Australia-wide data. And pretty much this is fresh data that was released like 2 or 3 days ago, actually, from the Australian Prudential Agency. So they really look at the banking sector, make sure that people are doing the right thing. So the banking data directly provided by financial institutions showing that mortgage and loan stress is actually on the rise. So if you have a look at this chart here, from April to May to June, in the big, even during the harshest restrictions in April, there was still a relatively large amount of people making full repayments and partial repayments. But as the month progressed, I think people then start to face the reality and also start to set up alternative arrangements such as loan deferral, mortgage deferral. So as you can see in May and June, the percentage of full repayments went from about 18-17% down to June, which is just over 10%. And if you have a look at even the partial payments, that's been up and down, but overall, the June number has been reduced from the April number as well. So there you go. So what is everybody else doing, right? So the people that have not been making full repayments or partial repayments are therefore on either a loan deferral program or they're just not paying their loans or mortgages. So there you go. And the very scary number, the second number there, is 11% of all mortgages in Australia have been deferred. 11% may not sound like that much, but considering the number of home loans and mortgages in Australia is over $1 trillion, so that's $195 billion worth of mortgages that's been deferred, which is a crazy amount. So you can see here from whether you're an investor or a homeowner, you can see that people are in distress, and possibly, you've also taken up this option as well. And right now, I think the most important thing is whether this is a temporary situation or a more long-term situation, obviously because of the huge impacts of COVID on the economy. So let's continue and see what's been happening with everybody across the country. Next important number, and it's been in the news quite a lot, superannuation. Um, the government opened a scheme once COVID-19 hit that you can obviously make earlier withdrawals without the usual penalties, because technically you're only supposed to tap into a super after you retire, and therefore that money keeps you going, right, for daily expenses. Once you retire and technically not earning an active income from a job or a business. So now, if you withdraw early, there's no tax penalties, and this is a process managed by the Australian Taxation Office. So if you look at the number here, so a record amount of $31 billion. These are all big numbers we're looking at. And once again, I think the trend is more important. So if you look at the chart here, what we're looking at, because COVID hit in the last financial year of 2019/2020. Now we're in the new financial year of 2020/2021. So people were able to make two withdrawals. So you have a period 1 and period 2. And then this chart also then breaks period 2 as into if some people only started withdrawing in period 2, which is the new financial year. So I think even if the chart is confusing and you're like, don't really care, the most important trend to know is that people are making repeated withdrawals, which is that dark navy bar you see on the chart. And the cumulative amount is only increasing, as well as the number of applications. So you would hopefully see a plateauing effect as people start to apply less as they figure out their finances. But that is not quite the case. The graph is starting to plateau, but it has not plateaued. It's more of a linear trend right now. So that's just something that once again says to me, at least, that a lot of people don't have savings, because if you have cash savings in the bank or stocks you can share, you can sell. That's sometimes better than obviously tapping into your super, which is your piggy bank for a rainy day. So this is saying to me that people are having to dig out the golden egg and piggy bank for a rainy day, because right now we are during a very critical time, and it is a rainy day right now. So people are in pain and definitely affected adversely by the whole situation. So we now see the whole country is in pain. What is happening with Victoria specifically, right? That's why we're doing this. Overall, let's have a look at firstly cases. And this is really recent data from yesterday, which is the government, including Daniel Andrews, said they don't look at daily data, but they do look at like 4-day averages, weekly averages. So if we do look at the 7-day average on this chart, it is starting to curve down from the peak in early August. That's when stage 4 was introduced. And it would appear, once again, this is not a final conclusion, it would appear that apparently the restrictions are working and it's starting to trend down. But we will, see what happens, because it's only been over a week since the stage 4 has been active, right? But the most important thing from this stage 4, other than obviously impacts on people's daily lives, is what will happen long term on property market here in Melbourne and Victoria, and also will that actually have a ripple effect out to the rest of the country. So that's what we're here to really look at. But for people who have properties in Victoria, this presentation will answer your question. So let's look at what's happening right now. So a couple of different things we like to look at are why these numbers are on the slide. Just to start off with, we look at demand and supply, and what drives demand and supply in the economy as well as the real estate market is people. So therefore, we look at overseas migration to Victoria. So this is overseas people coming here for work, to migrate, obviously, and immigrate here. And because of all the travel restrictions, I don't think anyone without a huge critical reason can leave or enter the country right now. So almost 99.7 and 99.5% lower currently compared to last year. And what that will mean is, we have less people here. So we have essentially a smaller pool of people that technically demands that housing and therefore demanding retail. However, because the COVID-19 has shaken up our economy, the usual demand and supply drivers have changed. So, as you know, a lot of people have started stocking up on food, and that's driven up retail food. However, on the other hand, investors are still looking at purchasing, but the fact that there's been a heavy impact of the economy on the rental market, rental pricing, as well as also just sales of real estate, that's driven down demand for properties. And that leads me to the next graph, which is consumer confidence. And that's usually a really good indicator of the property market pricing, because when people are feeling great, what do? You go out and move, you buy another home or another property for investment. That's when people spend. So when people are fearful, when sentiment is down, people tend to withhold their spending. So as you can see, even from the end of last year on this graph, 2019 to about March, confidence was great. Once the whole country was locked down in end of March, beginning of April, that's when confidence hit a bottom. So this chart is for the entire country, not just for Melbourne. Interestingly, as restrictions eased a little bit in May, June, obviously confidence recovered, which is great. And people in the real estate industry, such as myself, got very excited. And but unfortunately, as we hit July, and that's when cases started reappearing in Victoria, and now Victoria's gone back into lockdown. Interestingly, the whole country is not feeling great about it. So now confidence, if you can see, is reaching levels closer to the April level when lockdown for the whole country was introduced. So what this is saying to me is that the lockdown in Victoria does affect the whole country in some levels. And obviously, if we look at state by state and city by city data, that will indicate different things. But overall, the national sentiment is low. So let's now actually look at property values, especially for Melbourne, Victoria. And there are two charts here. The top one is for the Melbourne metropolitan area, and the bottom one is for the regional area. And the reason why we divided these two is they tell a very different story. So when people say the sky is falling or house prices are going to bottom out, it may not necessarily be true depending on where you are in the country. So if we look at Melbourne's real estate prices, definitely, and this is only the median sales price, once again, pricing for a house by house individual level, for the properties you hold, you really need to look at it more specifically. But overall, median prices has fallen because this chart goes all the way back to 2014 or 2015. Overall, you can still see prices are still strong. However, just with Q2 in 2020, we have fallen to about the same level as Q4 last year. So once again, is it the 20%, 30% decreases that all the banks and economists are predicting? No. It's not even 10% decrease. I think so far, API data monthly tracking has revealed every month there's been a negative 1 to 2% decrease in the Melbourne metropolitan prices. And if you, and this is also divided into houses and units. So the prices I was just quoting was for houses. If you look at units, interestingly, it's still relatively steady there. It hasn't increased a whole lot since 2015, 2014. But once again, that relatively insulated it from a huge decrease. There was only a very, I would say, negligible decrease in 2020 quarter two compared to quarter four in 2019. And if you have a look at regional Victoria, so in Victoria, we have lots of satellite cities such as Ballarat, Bendigo, Geelong. And then also on the eastern side, you also have places like Traralgon, right? So if you look at this chart, has there been decrease? No. It's pretty steady, and then some regional centers are actually increasing, reporting an increase in their median sales price. So, and if you look at the median price for units in regional areas, apparently that's where the money and the growth has been. It's been a huge increase. And a trend that has been once again reported on the news is that people now realize they can work from anywhere, they can work from home, as long as they have an internet connection and a laptop, hopefully access to Zoom or video conferencing. So people are making a sea change. I don't think, because moving house is such a big life event, I don't think the data in 2020 quarter two necessarily reflects that trend in its entirety. We'll need to look at the following quarters to make that conclusion. But regional areas are going strong. That's all I can say. So tick. So what we'll see in the future, right? And this is actually all the data that's been released by the state treasurer, state government. So this is their prediction pretty much. They said 325,000 Victorians will lose jobs or have already lost jobs over this pandemic. They predict that that unemployment rate will peak at around 11% soon, around September. And this year, our economy of the state will fall by 9%. And yesterday, the treasurers, specifically on property prices, said they could decline up to 9% from March to December. So that's not even a year. And he's naming decreases similar to what the economists and banks are saying. So not great news, unfortunately. And here's another chart that places more in perspective where Victoria is compared to other states. And this chart was a study of modeling exercise done by the University of Melbourne before stage 4 restrictions. So I wonder if they're going to run the model again now that obviously our restrictions are even tighter. But even if you look at this on a state-by-state basis, and once again, the bar that we want to look at is a second bar, which is more like the I don't know what you call that color, like teal green. Not the grass green, which is the third bar. And for Victoria, medium change in home equity was predicted to be once again in line with what the treasurer said, about -8 to 9%. This is also by quarter from May to September. So if we actually then look at the blue bar, a gray blue bar, which is fourth bar for each state, Victoria, that's the bottom 10% change in home equity. So if we think about like a bell curve, this is a very low likelihood for about 10% of houses in the state. So which essentially is the worst case scenario. Worst case scenario, unlikely, but potentially possible, is a negative 21 or 22% decrease in equity in or home values and home prices. So I would say we're possibly not that bad. So if we move back a little to the grassy green bar, which is the third bar, which is possible for the bottom 25% change. That's also sitting around negative 13%. So I would say now that we have stage four, instead of being the median, which is negative 9%, now we're potentially looking at more the negative 13% change in home equity. However, if you compare how Victoria does compared to other states, this chart is indicating that um, New South Wales and Queensland will do about the same as Victoria. South Australia is pretty resilient, with Western Australia doing the worst out of the entire country. And once again, this is all dependent on each state's economy. A lot of large manufacturing and mining has been impacted, which is why WA is particularly more sensitive to that than the other states. And South Australia has always been a little neat package by itself, insulated from the storm. So, from a this is pre-stage four perspective, not essentially all states will be impacted, but possibly not to the crazy the sky will fall extent that some people have been predicting in the news. 20% decrease in house prices, negative 30%. Unless we go to that worst case scenario. But once again, worst case scenario is unlikely for a reason. Unfortunately for Victoria, we are going towards the worst case scenario with these restrictions. And I think the most uncertain thing for homeowners and investors right now is whether the restrictions will continue, right? So stage four is only for 6 weeks, technically, until the 13th of September. However, after that, if we drop back to stage three restrictions, then it's still your movement is still restricted. The only way really the economy will start to revive itself is what happened at the end of May and June, when we started easing restrictions. You could see on the streets that the economy was starting again. People were going back to their jobs. So even if we do lower restrictions from 4 to 3 for Metro Melbourne, it's going to be tough for businesses. It's not like, wow, that's over. It's like, no, it's over for the toughest restrictions, but we still have them. If we have regional Victoria step down from stage 3 to no restrictions or limited, right, just social distancing and voluntary face masks, then obviously that will help the regional market. But as you can see from the property pricing, they're not where the pain is in terms of property price decreasing. It's where the metropolitan Melbourne is, right? So I think that's the biggest uncertainty, is what will happen after stage 4. Will we continue stage 4? Will we go down to stage 3, which is still pretty restrictive? And then what is the timing from stage 4 to easing of restrictions? Okay, now let's talk about your property. And I mean, really, that's where your attention is, right? So, what are your own priorities right now? And, that's really a question for you to answer. Here are some options. What are you currently keeping just your income and cash flow happening, keeping up your mortgage payments, bill payments? You just want to stay put, make sure everybody stays healthy. That's, keep food on the table. These are all basic universal human needs that we all have. So, but what is your personal number one is the question. And just the second thing I wanted to really share, I felt like it's important for all of us on the stage 4 and stage 3 is, how do we actually calculate opportunity cost for your property? Because I mean, that's one of the important terms and technical numbers that you can really do quite quickly to help you make a decision. So pretty much what opportunity cost is, it's a cost of not taking action, right? So if you have different options, if I choose A, what is, I know what will happen if I choose A, sort of, but what will be the cost of choosing A versus not choosing B? So that's essentially what this is: cost of not taking action versus cost of taking action, and which one's higher or lower. So this is especially true for your property if once again you're in hardship and can't keep up your mortgage payments, bill payments, or you can, but it's a little bit of a tough ask. Or if you're extremely comfortable in keeping up all the payments, great, then possibly it's time to invest, right? But once again, even for investing and selling, there's always this opportunity cost. So if you do have a current property, ask what is the current value of the property? And to get a valuation, it's very easy. You can even do it yourself by going onto domain or realestate.com.au, and it will give you a rough number because they have a lot of the data from your suburb. I just have a huge word of warning though with those online numbers, which are very easy and quick because they're very approximate and they don't take into account much about your house unless they know how many bedrooms your house has, how many, like what's the condition of your house. Like specifically, it will only give you a rough guide. But if you don't want to engage a valuer or obviously get an agent through, then yeah, that will give you an approximate indication. So I've labeled that as A. So once you have that number, that's going to be known as A. And then what is the value of your mortgage on the property? And we'll label that as B. And in terms of this number, it's essentially what I call the payout figure. So what that means is when you close your mortgage, it's whatever you owe. If you have arrears or a lump sum owed on the mortgage, so it will be included in this number, and as well as discharge costs and legal fees, right? By the bank. So that's B. And number 3 is what is my holding cost? So this is the amount of money you have to pay on a monthly basis. So this is your mortgage. If you're paying on a monthly, some people do pay weekly or fortnightly. So if we, doesn't matter what period you use, as long as we make sure all the numbers we're using have the same period. So if you're paying monthly, mortgage monthly, sometimes if it's not your primary place of residence, do you have any maintenance costs, right, on that investment property? If it is even your property, sometimes you still have maintenance costs. So all of that essentially forms your holding costs, as well as bills, council rates. That's all part of the holding cost, insurance. So add all of that, and then you can count that more on a monthly basis. And the question is, what is the difference between the mortgage and the holding cost? Essentially, it's the same thing, right? So if you're calculating B, I wouldn't double count the mortgage twice here. So holding cost is just what you pay on a monthly basis. B is what's a lump sum paid out on the mortgage if you were to close a mortgage today. So what the current value of your property is A minus B. So current value minus the payout figure on your property. Pretty simple, right? The future value of the property is essentially a potential future value. And this is the uncertain number. We don't know what it is, right? With these forecasted decreases on property prices, what your property or properties will be valued at is a little bit of an unknown. Even if the market moves down, how that will impact your specific property, like if the market goes down by 10%, your property could be affected by 5% if it's in a regional area, as we can see, or if your property is in a particular great condition, it's relatively new, versus if you have a property that's a little bit more rundown, needs some serious work or maintenance in a suburb that's slow to move properties, then even the market moves down 10%, your property could decrease by 20%. I don't know. So that one is an unknown factor, potential future value, and then you use that value to minus the payout figure, which is B, minus all the holding costs you have on the property, C. So because sometimes even during the sales period, right, if you're renovating or developing or even waiting, if you use the agent and put the property on the market, it could be several weeks or months or at least days before it sells. So the mortgage incurred during that holding period, I would actually categorize as C, not B. So what is the opportunity cost? How do you calculate this? Is then current value minus future value. So essentially it will give you a good indicator. So if this is a positive number, probably shows you that you need to take action now, right? So if you sell now, you're going to get more than if you sell in the future. However, if you get a negative number, so if you sell now, it's going to be less than what you might sell it for in the future. Then obviously the logical conclusion is to keep the property until this future period when your pricing will increase. So historically, like Australian properties, I mean, internationally, the general trend of capital value in properties is an upward trend, right? The key question here is whether we can get over this COVID period, this COVID storm that's hit Victoria and the whole of Australia and the whole of the world. So if you can afford to hang on, look, the future value will eventually possibly be higher. That's what we've seen historically. But because, you know, in Victoria, the period of uncertainty has been extended, as well as we have a lot more uncertainty. It's not just Victoria, but, you know, across the country and across the world. And if you feel like I'd rather be certain now and take action and not wait, then definitely I would recommend doing this exercise. It seems complicated and equations, but I mean, you can just do it even off the top of your head. You just go, okay, what do I reckon I will get if I sell today versus if I sell in the future, assuming a decrease in 10% in my property value. Does it make sense? Or do I ride that wave and wait a couple of years? Don't know how this is going to last until property prices start to recover again. So it also depends on when you bought the property. If you bought the property like 20 years ago, I'm sure your property value will have increased. But if you only bought the property, you know, recently, especially during those peaks when the property prices were higher, then yeah, possibly the mortgage that you have on the house, the value the mortgage was based on was on that higher value compared to now, right? So I'm just talking so you can absorb this and have a longer look at this slide. And if you do think about potentially selling, just some key questions. What is your key driver for selling? Are you just, do you really need the money? I think that is the key question. Or can you afford to wait, as what we've talked about? Can you improve the value of the property irrespective of the market? So as we talked about before, development, renovation, things that you can add value to your property. However, the market you can't do anything about. So you still do have some control. That's a good news. Do you have the budget on hand to improve the property? And right now the government does have a home builder scheme. I'm mixing home builder with job keeper, I think. Home builder scheme, if your renovation value is over 150,000, I know it's a lot, or if you are planning to construct a new build, then that you'll get $25,000 towards that if you qualify. So as we talked about just now, if you can seek help, government grants, ask yourself, how long will this last? And also what I was talking about in terms of job keeper, job seeker, there's a bit more clarity on those now. It's going to be stepped down. And bank assistance, a lot of loan deferrals as we saw, but banks have also extended an olive branch, especially now that we are in stage 4 lockdown. However, that's not going to be infinite. So the banks have clearly stated that they're going to work with people that have a very solid plan forward to regain employment and income. But if your situation is a little bit more volatile, then they're going to be less open to that. Yeah. And how do you position yourself? So I'll highly recommend speaking to an expert, accountant. Um, you know, it's a good start. Not sure you need to speak to a legal professional right now. So we have a special offer if you've been patient and waited until the end of our presentation. Is we are property developers and renovators, and to contribute, and also we're in Victoria right now. We would love to help by providing you with a free property consultation worth $150. And this is only for the first 5 contacts in August only. So please mention you've seen this to get this offer. We always get overrun with the number of calls. And so in August, we've actually already had 5 contacts from another webinar. However, because of the special circumstance in Melbourne right now, we are opening this offer for another 5 people. So please give us a call or email us to take advantage. Business hours, feel free to give us a call. Otherwise, out of our hours, please email us and we'll look at your timestamp, obviously, to know that you contacted us early. So pretty much, if you found this useful, what we can do during the consultation is really understand your specific situation. You can explain a couple of different ideas of what you're doing, and pretty much our role is with our years of expertise to see, if that is a good strategy for you, and maybe provide some alternative strategies for adding value to your property or also selling timings. So, and there's no obligation really. So it's just a complete gift that we want to give to all fellow Victorians and Melburnians, considering we're all in this together. And so, yeah, there you go. If you do apply, look forward to having a chat with you. Wish that all of your family and yourself are safe and healthy and staying, I think mentally healthy is super important, emotionally healthy as well. So, yeah, just hope that you are all well, I think. And you know what? Property and business definitely important. That comes second, personally, I think, after your physical, mental, and emotional well being. And also, just a final word for Melburnians and Victorians is, if because I know this current period is quite challenging from that aspect, from a being stuck inside, from being isolated from friends and relatives. Sometimes, your friends and relatives are also in Melbourne, can't go and see them under stage 4. Highly recommend a lot of Zoom calls, video conferencing, FaceTime, WhatsApp, whatever you use, Facebook Messenger. And if you know find that even challenging, or if you don't have that many family and friends that you want to do that with, then I'd highly recommend contacting Beyond Blue. Or if your kids have issues, a kids helpline. There are many free helplines out there provided by non-profit organizations to help you with going through all the emotions and all the crazy thoughts during this period. So I will actually link that in my video description, so you guys have direct numbers and direct links to that. I'm sorry, I don't know the numbers off the top of my head. So yeah, that's pretty much it. Have a fantastic day, week, and I will see you on the other side of this lockdown. If there are any other important updates for Victoria, I think what I'll do is integrate that into our monthly Australian Property Watch webinar. And then if there is a huge update for Victoria, I'm going to do another Victorian edition if there's more data warranted. So if you do want to see that, please leave me a comment. And if there's more demand, I'll definitely make one. So have a great day, everybody.